This is the Investor Connect podcast program. This is Hall T. Martin. I'm the host of the show, in which we interview angel investors, venture capital, private equity, family offices, and many other investor groups for startups and growth companies. I hope you enjoyed this episode. Thank you for joining us. Well, hello, this is Hall Martin with Investor Connect. Today we're here with Sarah Millar of Citylight Capital. Sarah, thank you for joining us.
Happy to be here.
Can you tell us a little bit about your background and how you got into this space and more about Citylight Capital and what they're all about?
Sure. So I joined Citylight about a year and a half ago after finishing my MBA. And during the MBA and for a couple of months after, I had been working in and around venture capital and impact investing, actually mostly focused on Latin America and emerging markets. I had spent my 2 years of the MBA doing that and wanted to come back to New York, and an opportunity was available at Citylight and joined them here. Before I was in business school, I was doing market research for a trading company here in New York. And before that had been a Spanish and international relations major in undergrad. But what Citylight does is we are an early stage venture fund, specifically an impact investing fund that is focused on backing experienced entrepreneurs building businesses that matter. We have no first-time CEOs in the portfolio. These are all experienced teams that have usually done this before. And we look for companies in the education, environment, and safety sectors, all fairly broadly defined. And our entry point is typically that Series A stage companies with about $1 million in revenue and reasonable valuations. We do some seed investing into companies that we think will fit our criteria for the Series A if and when they get there, but just might not be there from a revenue perspective. Those are $50,000 checks that we really see as just relationship building. Happy to go more in depth into any of that, but that's the general overview.
Well, one thing I found about impact investing is that what impact the entrepreneur may see needs to align with what impact the investor wants to see. And how do you match that up? How do you look for, do you have specific impact areas you look for? And how do you match that or communicate that to potential entrepreneurs coming to you?
Yeah, good question. So we, like I said, our sector or verticals are education, the environment, and safety. And we have a couple of theses within each of those verticals that we focus on, and they're constantly evolving. We're currently investing out of our third fund. In our second fund, our education thesis was much more about access and affordability of education and how to get the classroom online to be just as impactful as the classroom in person. We are now shifting towards looking more at sort of the future of work and what that looks like given automation and all of these trends that are requiring the upskilling and reskilling of the population in ways that we have not seen in the past. Our focus is really around the outcomes. And so you'll hear in impact circles the distinction between outputs and outcomes. And just to sort of give that a little more detail, an output is something like the number of students that are in a classroom. You can say, we've put 1,000 students through this particular course. But what we're focused on are the outcomes, which is, where did those 1,000 people end up? Did they get jobs? Did they get better jobs? Did they graduate even? Focusing on the outcomes of that and sort of how the quality of lives of the end users improve is what we're focused on. And so we have that discussion with each entrepreneur as they come in, because the outcomes that they're seeking will be different for each product that they have, but all in this sort of general sphere of improving the quality of life of the end user.
So there's a social component to this or impact component, and then there's a financial and a return component for the investor. Mm-hmm. How do you balance those two things out to make sure that it's still a good thing at the end of the day for both the entrepreneur and the investor?
Yeah, so you'll see in the impact investing space, there is a very wide spectrum of what returns are expected, as well as sort of what vehicle is being used to invest. We are early stage venture capital and we target market rate returns. And so you'll see in our portfolio, actually, most of our co-investors are sort of your standard or household name VCs like Andreessen and Kleiner and people like that. We see our thesis is that impact is the driver of revenue, and that without these outcomes and positive outcomes through this product, you won't have financial gain. And just to put a little more clarity around that, for example, an education product that does not get people better jobs or doesn't get them better test scores or help them graduate at higher rates is probably not a product that works. People aren't going to end up paying for it. If you aren't focused on how your product improves the quality of life of the end user, you won't have that financial gain. But I will caveat that with not every social enterprise is meant for venture capital funding. We look at companies that have mostly tech or software-enabled solutions that are very rapidly scalable, that can get us to that venture-like return. We also see a lot of businesses, particularly in the impact space, that are trying to have impact on a particular population or in a specific place that just really don't have that scalability. And that doesn't mean that they aren't good businesses. They just might not be venture businesses. They might need to find a different source of funding to give their investors and themselves the financial and the social returns that they're looking for.
So you're still using VC metrics to determine what might be a fundable deal, even in the impact space, large market, scalability, other factors that might go into it. Aside from the standard financial metrics, what are you looking for that might determine who is in or out on your fund?
Yeah, so we have a couple of criteria sort of at the front end that are sort of, I guess, standard for the most part, but then we have the impact criteria as well. So like I said, we tend to not back first-time CEOs. So we sort of looked at LinkedIn profiles and talked to the entrepreneur about their backgrounds to get comfortable with sort of their relevant networks and how well they know the space. We also look for that threshold of about $1 million in revenue for our Series A investments. And our general average pre-money valuation, I would say, is about $25 million. And so we're targeting somewhere between a 5 to 15% ownership post-money. And so we need the valuation to be appropriate for our check size so that we can get that ownership after the deal is closed. And then the last piece that makes us distinct is really that impact component. It's much more of a gut feeling, but we need the entrepreneur that we're speaking to really be driven by the mission and by the impact of their company. Because when push comes to shove, we need to know that they are committed to this and that impact is core to their business. Otherwise, it's just not a good match for us as investors. In the due diligence process, what that looks like is the same way that both us and other venture funds will put together sort of a revenue projection as to what does this look like in 5 years? Can it get to that $100 million in revenue mark to get us that 10x return? We also put together an impact pro forma, which is basically a spreadsheet projecting out if this company says that it or can achieve what it says it can achieve, this is what that looks like from an impact perspective. And we work on that with the company during the due diligence process to understand what are the key metrics that we need to be tracking on the impact side, and how does that scale along with the financial scalability of the company.
Are there certain sectors that you would relax some of those criteria just because it's a very hot sector? In the non-impact space, I find healthcare is a place where I'll find VCs coming in a little earlier than normal because the exits have been so strong and the growth rates have been so good. Are there any sectors inside impact investing that you think model that as well?
Yeah, so I think we keep our definitions of all of our sectors fairly broad on purpose because we want to be opportunistic and sort of go where the best entrepreneurs are working on problems. And so, for example, in our safety vertical, we've just started to explore a little bit more of that healthcare piece that you're talking about, like personal safety as defined by addiction recovery or by telehealth, for example. But going too far outside of our main focuses, we wouldn't be the right partner for somebody that's doing healthcare that is super technical, or somebody in fintech that is doing a very complex lending business, because we just don't know it well enough. There are plenty of impact investors out there that are explicitly focused on those types of deals that would just make better partners for those entrepreneurs. And so we are happy to talk to anyone about sort of how they can have impact and our thesis around the product generating the impact and how you link product and impact to revenue. But aside from that, we're not going to be the right people for them to come to, and we would be remiss if we went after them.
Well, to switch gears for a moment, it just seems that impact investing is taking over from the nonprofits in a big way. Resources are shifting from nonprofit to impact investing. And I was wondering if you had some sense of where money flows are actually going inside the impact investing in a broader picture, not just in your window of it, just to know where the interest is from investors today in the impact investing world.
Yeah, so I can speak to sort of where we're seeing interest for us specifically. So the majority of our LPs in our fund are high net worth individuals and family offices that are explicitly seeking impact capital. We represent one very, very small sliver of sort of the impact world. So you have plenty of other early stage VC investors out there. There's venture philanthropy. There are private equity funds like TPG and Bain Double Impact that are grabbing a lot of capital from more traditional and sometimes institutional backers. It really depends on where the LP or where the investor has their passion. It's very difficult to compare, for example, an education fund to an environmental fund. You might do it on returns alone, but for a lot of people who are looking at impact investing, it's solely based on sort of where they feel they want to have impact. We tend to get capital from people who want to have impact on our overarching thesis is sort of urbanization and people in cities and how we make the quality of life better for those people. And so we collect capital from folks who sort of agree with our thesis there. But you see plenty of capital going, especially into continuing into fintech and sort of not microfinance, but more financial inclusion. There's plenty of money going into healthcare. There's always been a big funnel into education, but it depends sort of what avenue the investor is looking to go down. Because for someone like us, we target the entire US and these hugely scalable businesses. Other impact investors are looking specifically at high schools in Detroit, for example. That's going to be a different flow of capital to a fund that targets that instead. Does that answer your question?
Well, yeah, it shows that there is a wide range of investors out there with a wide range of interests in impact. And I always found matching that interest with the entrepreneurs was really the magic in an impact fund, was really getting alignment across the board. And of course, you can't do everything, but it seems like if you have broad enough buckets, you can do some matching and align them in that direction. What is the challenge you have in matching them up? Are you able to find that they either fit or they don't, or people modify their business plans to fit the fund, or how do people manage that process?
With us specifically, it's really, it's that gut feeling at the beginning that we want entrepreneurs. And one of the reasons that we tend to see mostly serial entrepreneurs here is that, they've built these huge businesses that may not have been impact related. And now they want to come back and sort of give back through what they know how to do. They're trying to build a massively scalable business that also has impact. If we don't have that, if that alignment isn't there up front, it's very difficult to sort of convince us that the entrepreneur is mission driven. We get just as many people through our doors who are not going to commit to measuring or tracking their impact, and that's not a fit for us. Some people will come in and be very mission driven, but just not committed to the financial return piece of it. So we need both of those boxes to be checked for us to really move forward and get interested. But we're not a fit for everyone. And there are plenty of people in our network and outside our network in that impact investing space that are. Actually, the partners that I work with here have created a nonprofit organization called The Impact, which is a way for family offices specifically to source vetted impact deals. And that they have a wide range of sort of return profiles and the sectors that they're looking at. And that's a way for both entrepreneurs and more mature impact businesses to find capital that isn't necessarily early stage venture. There's different matching up. We know most of the people in the early stage venture community. And so if the financial piece isn't there, it's a little bit more difficult for us to connect them to the right person. But if it's a strong entrepreneurial team and we think they have a solid business plan, we'll connect them to the relevant people.
Very good. Well, in the last minute we have on this episode, what have we not covered that you would like to get the word out on?
Oh, that's a good question. I think one of the things that we're trying to focus on a lot, and this is a theme that you're seeing with funds like the Rise of the Rest and Revolution VC is there's a lot of impact and investment to be done in the non-coastal areas. Looking outside of New York, San Francisco, LA, Boston is something that's hugely important to us. And I think something that especially a lot of Silicon Valley VCs can miss. And so we are actively looking for talent and for companies that are based outside of those coastal areas to be able to give them capital and sort of prove that the talent and the scalability is there to create these new tech hubs in the U.S.
Well, that's great. Well, what's the best way for people to get back in touch with you? The website, or what's the best way?
Yeah, so people can find us through the website. It's citylightcap.com, or they can email me directly. It's just Sarah, Sarah, at citylightcap.com. We look at every email, so happy to be helpful to anyone I can.
Well, that's great. We'll put that in the show notes so people can get back in touch with you if they have questions, and appreciate your taking time to join us today. Hope to have you back again soon for another in-depth talk about impact investing.
Great. Thank you.